All right, here we go. Recording started. So let's go over a few things because I've had a few conversations. I've had the pleasure of having a few conversations with you guys, and often what happens when you're surrounded by lads like Mikey and Tom is that the entries end up being so precise that it can feel like you shouldn't get involved at all unless you're in literally at the bottom, in a sense, right? And that's not how the market works. There's many ways of getting involved, and with refinement you can get in at a better price, right? But the way to do that is by refining your structure and your narrative, because that allows you to determine whether you think something's taking liquidity or if it's going to continue. For example, this sweep down here. When you're looking at this movement, you're expecting to go above this high. So you make money if you get in here with the stop there, if you get in here with the stop there, if you get in here with the stop there, if you get in here with the stop there or there, you make money anywhere in here. We don't want to be buying up in here to take this high. But it's important to note that you don't need to be in at the bottom to trade properly. What you do need is two things. You need to understand, are we trending or ranging? Right? And you need to understand, are we going up or down? And, three things. And you need to understand why. And the why is really the main reason you guys are here. Right? Because it's the why behind the entries, whether you're here, 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 or here. And what that determines what you want to see to then go forward. So the candles will give you advanced nuance. But in reality, it's determining after this candle here, where all you're seeing is the break above this high. This is your change in order flow with narrative, with structure, that we're going higher. So this is the aggressive trade. This is the change in order flow, which then gives you a retracement. And as long as you're in somewhere in here, managing your risk properly, you're going to make money more often than not. And by extension, you will unlock everything that hopefully you guys are visualizing and dreaming about. It's not that far off, right? Where you don't buy is you don't buy in here, right? You're not buying as this is moving down here, because you're understanding that this movement here is trading back down at minimum to this area. And now you're looking at this being consecutive bear bars, taking liquidity, right? Failing above this candle, and then finally sweeping the low. Now we can increase everything as well because we're talking about entries right now. And you're increasing your probabilities by looking at whereabouts your strong price delivery comes from. For example, and we'll go over the market review a little bit to illustrate all this, because there was quite a few structural trades today. I'm not looking at marking anything from these lows here. Get out of the way. These lows are redundant. This low even is fairly redundant. It became redundant after we built an SNDR that took this high. That's an advanced nuance. What you guys are looking at, out of this entire move, where did price really start accelerating? You have two spots. You've got this low here, where we really started going up. Not this one, not even that one. This low generated a move up, couldn't close above here, came back down. This low generated a bull bar, sideways, and then another bull bar. So this is lethargic. Finally broke the high, yes, that's significant because this is the SNDR. But this low had significant price movement. Why does that matter? It matters because if you're looking short term, this is now your pocket. And now you're determining whether or not to get involved here for that retracement up, which would have paid you 20 or 30 points today. Right? Now, the better trades, in my opinion, were looking from here. Why there? Because this is where price really started accelerating and broke this SNDR. This low to me is important. Not only did we tap up into this zone that sent us down, but we went sideways and then delivered strong price action. So I draw things from here. We broke, we traded back down to where? Right? We tapped off the midpoint of this extension. We dropped down yet again into our pocket, clearing out liquidity. Change in order flow, gone. That's what makes this trade a very strong trade. This traded up, failed above here, telling us it wants to come back down. And again, we got multiple trades in here. You might not get involved in here, but this sweep and failure is an aggressive movement back up to here. That might be your scalp. Seeing failure in here, we expect to trade back down, and your immediate thesis is liquidity. Why? Because this low failed to make a new high, denoted by failure. We take this liquidity, fail to close, and yet again another tap. Yeah, so there's a few different ways of getting involved, right? And again, on the concept of triggers, you've got your tap in. When you're expecting a sweep with narrative, we're looking for failure, which tells us we're going higher. Failure on a 1 minute time frame leads to 1 minute price action. Lethargic movement on a 1 minute time frame leads to a rejection. Going on a 15-minute push or higher. But again, we don't need to be in here. But if you're looking at this movement down, what high do you want broken? This one. This is your lower time frame. Push down, pushes up, breaks. So when you break this high, you expect that tap back in. That tap back in, trade back to the imbalance. You could argue this area here, and then closes there. A lot of people bought this at 90.50, which is what, 27 points off of this low, and made how many points today? Right? So you have a few different ways of taking these trades, depending on your model. right? But all of them require narrative and structure. All of them. You have to know whether we should trade higher or lower, or if we're in a range, and you want to have some aspect of failure, right? When you're looking at a change in order flow, we're talking lower time frame structure. Right? Lower time frame structure, which means that you're following your path where you've got this high, trades down, trades back in, trades lower, breaks, trades back in, goes. How could you avoid? So like if you're saying put a stop loss below here, can you guys hear me? Right. So is this, put it in the chat, is taking a trade in here a valid trade? Forget outcome. Is this a valid trade off of this sweep in here? Yes. 100% it is. Right? It's aggressive, but you've got your tap back in for your imbalance. Your first imbalance puts in a new low, and then we see failure. Love it. Beautiful. And in fact, I took it myself. Right? So you have two concerns with this low. You have two concerns with this low. Right? You have this. So now we're trading into this area of resistance, and you get a body closure bearish. This drastically lowers your probability here, because now you're suggesting this candle is going to open and go on a rocket ship, when it's telling you it just tried and got sold off to the point where it closed here. And in fact, this is a short trigger. Not suggesting we take this short. You would have made money if you did. I would not take this short because I am expecting higher, even though we failed up here technically. Right? And the reason that I was so heavily bullish is because we broke this SMDR. So until this area breaks, there is no such thing as a confirmation short, no matter how beautiful any of these looked. And you would have made money if you would have shorted these. This is where you stock longs until you see failure. So how do you avoid this? You don't avoid taking the entry. The entry is great. The trade management has to be you're expecting A, and anything other than A, B, C, D, F, H, M, anything down the line, you're out. Because the reason being is that price is telling you here that it's not doing this. Right? Now you could argue here that you had a sweep of this candle. And that's true. You did. This very well could have just traded back down into this and then gone. That's very true. You could look at both. Right? And this candle opened, traded lower, and then closed there. This isn't going to be perfect, but the difference between a trade in here that's going and this trade is that this trade has now mitigated this area. Right? This has now failed here, making this high weak. So you have different, even though it's about 10 minutes apart, you have very different situations here. And as a result, you're expecting this movement back in to be a retracement to go higher, whereas you're expecting this failure at the point of interest to actually break that low, whether we go lower or not. And it could have, right? There's no guarantees. This could have traded below this one as well. Chose not to. Would I take a stop loss in the 1101 candle? I typically want this candle sweeping below here, trading through, and then closing bullish. Similar to kind of what this one did, but that's not ideal, right? You want something similar to this, right? Like gone, finished business and gone. You usually find these, even in reverse, at extremes. That's how you pick tops and bottoms usually. With narrative, of course. Right? So for me, there's no sweep and closure on these here. So the best way to trade this, in my opinion, is to wait for the change in order flow unless you're very adept with your sweep models. The change in order flow will tell you that the retracement is over and now you're looking for higher prices. Right? So again, beautiful trade. But understand what conditions you're in and what needs to happen for a bottoming pattern. And you'll notice every one of these had a change in order flow. This one, right? Traded from this low to here, broke, traded higher, breaking order flow, traded back down, left. Lower, right? Traded up. You could even argue that here, but this had to take this liquidity here because this is now a weak low. So that's a little bit different for that one, right? It's these sort of advanced nuances that we got to be cautious of, right? So this high took in this major low, finally mitigating this area, and then we broke above it. Traded back into it, left. Same thing here. In fact, that's a bit of a stretch. But I think there were yeah, this one was nice. This short was beautiful. Right? So it traded up above here. We might have expected this area to hold, and in fact we didn't get any sort of triggers. Right? So this high ended up breaking here, trading back in, and then leaving. Master the change in order flow. It'll keep you on the right side of things. Otherwise, you might consider going long here for this high on a sweep or something. Yeah, the sweep model video actually has a lot on it. Right? Typically when you're late in your trend and you've got failure that occurs, you don't want to start taking sweeps. Right? So consider this up here. We have strong movement, consolidation, higher time frame push. So how fast do we expect this move to go if it lets go? Pretty fast. This isn't a swing. This isn't a swing. So what do we got here? We've got a high and no structure all the way down to here. None. So what happens when there's no structure? Liquidation. Bang. Reverse barbecue. Right? So people might have seen this. Oh, we got a wick here. Oh man, bet the farm. Paddy Wheeland, let's go. Oh, we got our sweep. Let's long. And then you get wrecked, and there goes your account. Right? Why? Because this is our objective here. Remember. Number one, always structure. If I could spell structure. What is the market doing? Right? It's always first and foremost. Then why? These are equally important. Equally important. Now you're looking for the areas of interest that we're trading down to. Right? Don't take trades outside of those. Otherwise, you're literally just gambling and hoping. Yeah, YouTube pays a lot. Affiliates probably do too for his viewership count. And then last is your entry. Right? Change of order flow. Sweep model. Candlestick. Or aggressive location based. In this order. In this order. Do not take every sweep you see, otherwise you might get a call from Apex or Top Step thanking you for your contribution to their beach house. Do not do that. You have to have a reason. Yeah, that's a gorgeous short. Oh yeah. Oh yeah, I've seen some of his trades. The guy's shorting like here. Now I don't care about how anybody makes money. Right? Yeah, no, I know you were in on this, Zid. This is a beautiful short. Right? And there's many things that go into this. For example, this is what's considered in the candlestick world a final flag pattern. Right? Usually you get this and then you get a last spike and then death. This actually had a potential of doing it here, but we got held up at the area of interest, sending us higher. And then finally, what happens? What happens? Somebody pointed out, what's the difference in here that didn't happen here or in here? Valid high. Valid high. Love it. Love it, love it, love it. Right there. Body closure underneath. Trades back in. Failure. Closes there. Continues. Getting everybody in long here. Oh, well, that didn't work. Bear bar. Accelerating bear bar. Oh shit, we're on the wrong side. Panic. Brief retracement. Liquidation. Back down to where? Retraces up to where? This high. Fails. Strong push. After what? Lethargic price action. death. Is this a retracement or is it taking liquidity? It's taking liquidity. Right there. Not here. This might give 10, 20 points, that move. Bouncing off of the order block or whatever. But your expectation is this. So why is that important? It's important because as you guys are learning to read the market through this lens, a few things happen. Some good and some, I don't want to say bad, but certainly transformational. Because now all of a sudden, you have a pretty good understanding of why the market's doing almost everything that it's doing. Whereabouts it's going to form a high of day or a low of day. Right? If you're expecting this to trade up, where are you expecting it to trade up to? Midpoint of this zone. Whether you're involved or not. Who could have predicted this? Right? This became a valid zone as soon as we closed above that. So this is where you're looking for that failure. Not us. Not us. True, he could have. If he wasn't shorting in here, I'm sure he would have. Hopefully he wasn't. I hope everybody makes money, but the fact of the matter is that most don't. Right? Now, you've got, and I will go over the morning market review, by the way, eventually. You've got this movement. You've got to trade back up. You've got this movement. You got to trade back up. You've got this movement. Now what's your expectation? Right? First off, where are we trading back down to? The one place everybody should have been looking long today. Your SNDR. This is your high probability area, especially when you look at all of this PA. Where was the most violent move? It was this, wasn't it? Why is that important? It's important because that's where we determine where to put our low in for the retracement. Right? So now you've got structure, your SNDR, which also is your area of interest. You've got lethargic movement into it. You've got narrative, right? You've got this high, which is now weak. You've got this area, which is now mitigated. So you're targeting this high right here at 73.50. This traded to 73.25 by one tick and then gave a change in order flow. And what are you looking for predominantly? You've got two ways of getting involved. Same thing as before. We don't need to be in here. That's ideal. You guys saw my trade of where I got in there. And my target was here. It's in general chat if you haven't seen it. I wasn't in at 406. That would have been beautiful if I was. I don't need to be in at 406. I need to be right. I need to make money. I don't need to be in here. Perfect. You get a body closure here, you're looking for a pullback. And guess what? Our bank account doesn't care if we got in here, 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 here. As long as your structure and narrative is right and you see what you want to see, Bailey's system makes him money vast majority of days by the look of it, you legend. Right? You guys are looking for the market telling you that it's ready to go. So what do we see here? We've got a few different things. First biggest one is that we have a body closure above this candle that took liquidity. That validates this as an order block. I always wait for the market to show me its hands. That's right. I don't have enough money to stop this from trading below here. Right? I'm never going to be able to hold up a low or put one in. But if it tells me, hey, we've got a body closure above here. Number one, that takes you out of considering any short position until it's achieved an objective. And number two, now you're looking for a pullback. A pullback to where? This actually only traded to the midpoint. If we want to get fancy, you're looking at where this move came from, which really was this. And now you've got your pocket here. It looks like hindsight, doesn't it? But we look at this on a daily basis. We take these trades every day. And you can too. You can too, right? What you don't want to see to stay out of trouble. This could sweep this candle and trade back down. What you're looking at now is you want this open of this candle to be a bouncing point for price. That tells you that this is going to be a higher time frame move. So worst case scenario, you see this chopping around and then you see a poor bear bar in here that didn't sweep or do anything. Tried selling off and it yielded nothing. That's go time. Why? Because this is the attempt to sell off that we keep talking about. And they came up short. This is candlestick video number 1. Your expectation after that failure, it's go time. That also kept you out of trouble in here. Because make no mistake, that was a valid area to look for a long. You had this area, which now had a body closure above it, validating it as a swing. You had your midpoint here. And you also had this here. Many reasons to look for a long in here. Many of them. It attempted to rally in here, and what happened? They came up short. Therefore, this movement was violently looking for liquidity. Where's the liquidity? It's not below this one. That might have been an area of interest. You're looking at here. Which was incredible, as you guys could tell as well. Runs right up to this area that sent us down. And then unloads again, taking liquidity. Lethargically, I might add. Change in order flow, trades back into where? Midpoint of that zone. It looks silly, doesn't it? Doing this in hindsight. That's unreal, Bailey, by the way. Congrats, bro. The amount of work you've put in to get that, that's unreal. Right? So, beyond that, what I was concerned about today, we've swept twice into our area of interest. Beautiful. Why I was concerned about a movement up is the same sort of thing we were just talking about. We had this candle that swept underneath. That was the area I wanted to see closed above. We traded above it. You could argue a change in order flow, kicking us back down. Many reasons to go long, I get that. I was thinking we might sweep this internal one. But no bueno. And now we've got this area here. Oops. That we likely just tapped into. So it'll be interesting to see, should we trade back down for Asia before going higher. Any questions about the review today? The last thing I'll leave with you guys, if you're ever in doubt, look for where significant price movement came from and draw your area of retracement for it. That would have netted you a fair amount of points today, just on this movement before open alone. Multiple shorts that came out of there. Not this high. That ended up being somewhere, maybe. I don't know. I typically don't look at... well, it did actually cap it, I suppose. You could even argue there, which obviously had its thing. I stand corrected. Right? I was more looking at this high for capping PA and trading up into this, but look for significant price movement and then be patient. Lethargic movement into failure, trade with that trend. Yes, it's recorded. We got you, Jose. You'll turn a corner, bro. I know you're already starting to see the progress. Outcome will come. Progress first. Right? With trend, look for failure. Trade small if you're not concerned, or if you're concerned about risk and whatnot. We'll likely go on YouTube tomorrow. I love the group that we have here. We're really trying to grow this and push it to the next level. So if you guys don't mind sharing the YouTube channel, we're going to be posting a lot more on there. And doing some shorts and doing some community live streams on there as well. So we'll see you guys tomorrow morning on there. If you guys... hopefully you guys had a green day. This week's been a lot of fun. And we will chat with you guys very, very soon. Appreciate all you guys.